Good afternoon, everybody. Welcome to the market close. Rate cut day is here, and exactly as we expected. We got 25 basis points on it. Well, both sides of the border. So I guess rate cuts in stereo? Is that what we would call that? Anyway, rate cuts have come in, 25 basis points. We're going to look at how the markets are reacting. I will tell you, a little bit of a red candle that developed thanks to that rate cut. But we are in the green. We did dip very briefly into the red, and well, let's get right to it. Let's get immediately to the charts here. I'm going to pull this up here. You can see right here, well, hopefully you can see. Depends. If you're on your phone, you're probably taking my word for it. But we got ourselves, as the Bank of Canada, as the Fed announced their 25 basis point rate cut this afternoon. We went into a deep red candle. We wicked down quite a bit on the TSX, but we have since recovered. We are slightly in the green, 0.15. Actually, the funny thing is, when I was setting up the lighting, I looked at the chart, and it was just a tiny bit in the red, and then it was a tiny bit in the green, and I'm like, I should just go with a white light today because it's too close to call, but it then did seem to recover a little bit more, got us a bit deeper into the green. So we're doing good. We're doing good. And we're still having a pretty darn good month. As we have moved past the halfway point, we are still pretty deep into a green September. So let's see how this continues. Looking at the U.S., they are also, well, they're a little bit to the red. They're negative 0.11% down. You can see they have that same reaction. So when the Fed cut 25 basis points, and interestingly enough, at least one member of the Fed wanted to go deeper. They were one voted for 50 basis points, but it was 25 basis points. It's a start, guys. It's a start. So let's see how this is all going to roll out. Now, the NASDAQ also slightly in the red, 0.09% down. They didn't plunge the same way that the S&P 500 did. You'll notice that's mostly a green candle. Yeah. Well, I guess you could say there was a little bit of red, but they recovered it. They recovered it pretty quickly. The Dow Jones is up 0.56%, but you can still see the clear indication of that rate cut announcement. The Russell, oh boy, the Russell had a fun time at the rate announcement. Of course, the Russell being those little caps, but look at the size of this candle. They wicked down, they wicked up, ended up somewhere in the middle, but pretty interesting. Gold is down a little bit, down 0.80. Silver down quite a bit, down a full 2.25%. WTI, so West Texas Intermediate, down 0.66%. Bitcoin is down a wee bit, almost a percent. Ethereum kind of holding flat, slightly in the green. All right, let's jump over here and take a look at the heat map. I'm just going to refresh this. I want to make sure it is fresh. And there we go. And yeah, it's kind of interesting. There's some red here, but it's actually not that bad. Most of it is pretty flat. Most of it is absolutely flat. Couple of standouts. Barrick Gold up 2.37%. Ivanhoe up 2.73%. X, by the way, X is not, it's not Elon. It is the TMX. The TMX, they've got the ticker of X on the TSX. They are up 2.51%. The railroads both down. Bombardier's up a good 2.17%, so not too shabby. Let's take a look and see what's going on south of the border. We got a little bit of big red in a few areas, particularly in tech. So look at this. Nvidia down 2.57, Broadcom down 3.58, Amazon is down, Home Depot is down, Oracle and Google down, Microsoft kind of flat, Meta kind of flat though, on the downside of the flat. The downside of flat. We'll go with that. Any really big winners? I'm not seeing too many. Well, maybe Netflix up 2.39%. Visa's doing good. They're up 1.6%. So, what can we say? Looking over at crypto, as you can see, once again, Bitcoin in the red a wee bit, and everybody else is mostly flat. All right, let's grab our crap coin of the day. We'll grab a green coin. We're gonna grab which green one should I grab? Let's grab this one. All right, come on. It does not want to come up. Here it is. Barbecue coin, BBQ coin. What a name. It's like, are they running out of names? I don't know, but yeah, no idea what this is. Is this just a coin to celebrate people who like to eat in their backyards? Maybe. Don't know. Kind of don't care, to be honest. It's probably, I'll call it a rug pull. It feels almost rug pull-like because, trying to capitalize on everybody's favorite backyard activity. So yeah, it is not worth very much. It's worth, well, a tenth of a penny. And like I said, I don't know what it does. Kind of don't care. Not sure why it's up 30% today. No idea. But this just goes to demonstrate there's a lot of these coins. There's a lot of noise in crypto. Avoid the noise. Avoid these little coins. Or if you are going to dabble in the little coins, make sure you know what you're doing. That's what, read the white paper. Know what that coin does. Otherwise, you might as well throw your money up in the air and see if you can catch it on a windy day. I don't know. I don't know about this one. I always say, stick to the big one. Stick to your Bitcoin, your Ethereum, your XRP, your Solana, and heck, even your Dogecoin. At least those ones you're not going to be losing all your money. That's for sure. All right. Whew, that there is, let's check out the chat. All right, let's see here. Oh boy, there's a lot. Brian, first in the house with a good afternoon, everyone. We got Cowboy. And we got Stan Gray saying happy Wednesday. We got Paul. Good Fed Day afternoon. And we got Brian. Oh yes, this is great. I love this actually. I believe Brian was the one that messaged me. Somebody messaged me yesterday and let me know about this. But so we're talking about MAPL. So as you guys know, Evolve has those two new ETFs. So Biggie and MAPL. Well, it appears to be the MAPL got delayed. Normally if they announce them together, they release them together. But the reason MAPL got delayed is there was some kind of an issue with the name, so they've had to change it. So they're changing it to Canny, CANY, and it's a nice name. I like MAPL better, but if somebody else already has claims on it, I guess I'm surprised they didn't figure that out sooner, honestly. But the thing is, Canny is coming out. And according to Brian says Canny is expected to come out tomorrow. Yeah, that sounds about right. I heard it was going to be this week. So tomorrow is probably the date. I'm liking it. All right. And CC says the September market crash is canceled. Yep. Yep, it sure is. So far, it's been very green. It's a pretty strong month. So what can we say? Danielle, hello all. It's not easy to stay positive with all the negative financial info we see on YouTube and in the news. Oh, yes. You got to let me explain this sector. I'm going to explain this sector to you guys. Not the sector per se, but the YouTube aspect of it. One of the problems, I guess, with YouTube is that, and this is not even a YouTube problem, it's with news, it's with almost everything, but unfortunately, unless titles seem sensationalistic, people don't click on them. That's where you get that word clickbait from, because people will try to make things sound big. And the newspapers have been doing this for years. Like, you read the headline. The headline's supposed to catch your attention and get you into the article. Now, there's a couple of ways that this happens on basically on YouTube. There is straight clickbait, which I disapprove of 100%, because it's that one that will just put whatever will make you click in the title, regardless of whatever the content is. And then there is, I think they call it clickbait level 1. So what that is that's kind of, yes, it's still the sensationalistic titles, but the content delivers on the title. So if somebody wants to use a clickbait-like title and they deliver, I'm okay with that. I'm guilty of that. 100% I am. But yeah, if you're going to provide that other type of clickbait, that one, those ones that give you almost no information, they suck you in and you get in there. And like I will tell you, I've got caught in one of them sponsor things once. I was clicking and they showed the picture they showed was of somebody I was actually interested in finding out what was going on. So I clicked in. I should have known better. And it turned into a slideshow. And I'm going through it because I just want to see that one piece of thing that was in the title. Well, after 15 minutes of going through slides, guess what wasn't in the slide deck? The thing I was interested in. Not even there. So, that, to me, that's bad clickbait. And as far as I'm concerned, if you're doing that, I got no respect for you. I got none. So yeah, be a little careful of things like that. And also, take what you're hearing with a grain of salt. Because I'll tell you, I'll give you a perfect space. Crypto. Crypto is a great space for this. If you start looking at crypto videos, you could probably pull up 10 videos on Bitcoin. One that will tell you it's going to the moon, the other that's saying, hold on, it's about to crash. There'll probably be a few that might tell you it's going sideways. And there might be that one reasonable person and they're saying, oh yeah, it's kind of a, right now there's a little bit of a chance it might go up. There's a little bit of chance, it might go down. The one that's being reasonable, who's not, who's not calling out the sky is falling or you better jump onto that rocket ship right now, they're not going to get the vote. They're not going to get the clicks. And as such, if they don't get the clicks, they don't get the people watching their content. They don't get the subs. They don't get the AdSense. If that's what if they're trying to make a living out of it, they're going to lose all of that. So it is one of those things that, that does happen. Unfortunately, it happens. So back to what you said, just always keep that in mind. So when you see some of the negative stuff, you always want to ask yourself, are they presenting it in a negative light to get views? Or is the data backing up what they're saying? And, and sometimes they might make the data look like they're backing up what they're saying. I don't want to badmouth anybody, but I'll badmouth one person. I'm going to badmouth Meet Kevin. And I know a few of you guys like Meet Kevin, but, he has some good content, but he is very, very guilty of using clickbait. There's a lot of times you read his some of his video titles, he'll throw in words like World War III, the end is here. He'll make it sound like everything is coming crashing down on you. And it's not. And a lot of times you'll get into his video and by the time you've watched the video, you realize, okay, I see where he's kind of tied that into kind of the worst case possible extreme interpretation of some data. But, you got to take it with a grain of salt. So, and that's what I always say. I always say, take it with a grain of salt. One thing is find a channel you like. Maybe this one. I don't know. And if there's like a Discord, kind of like this one, if people are giving you some really bad information, just head in there and talk. Or even, another source too is Blossom. Head over there. And just sort of drop. You can always ask questions over there, and you'll get a lot of responses. But for the most part, be a little bit weary. Because here's the thing. In finance, when the crap hits the fan, it sometimes happens pretty fast. And most times you don't even know the crap has hit the fan until after it's already happened. So a lot of these people who are saying, well, this is going to happen by the end of the month. We are going to be, we're going to be, I don't know, kissing the red. Well, they don't know that. They really don't. And that's just an interpretation. But anyway, let me get on to I'll get on to the next. Guys, it's bell time. The market's closed. I got off on a really long tangent there, and I was only 30 seconds late. Wow. All right. CC, no commitment to the dip is huge. All right. And hello, says Lily. We got the Tim Blunt music in the house. I thought I heard a cello, so that might have been Tim coming in. Dorpat says, I missed the brief dip moment. It was quick. It was quick. So I think unless you were really lucky, you probably missed it. That's what I'm going to say. I didn't hit it. Danielle says, also, there are so many negative YouTube videos about covered call ETFs. So confused. I try to stay focused on my early retirement plan. Okay. I'm going to clear it up right now. Let me clear it up 100% for you. All right. So you've got two kind of strategies. One, of course, is ETFs, just regular non-covered call ETFs. And they are going to grow. They're going to grow well. Now, actually, you know what? Danielle, I'm going to use the whiteboard. You gave me my excuse. All right, let's hit the whiteboard here. All right, here we go. Bang, boom, love it. And I need a tool. I need to be able to write. All right, so we're just going to put here, whoops, come on. Let me write. All right, get rid of the arrow. All right, give me the pen. There we go. I should be able to write now. All right, so if you have your regular ETF, all right, so that ETF, it's going to track, of course, a basket full of stocks. Or maybe it just tracks one, but it's going to track a bunch of stocks. So it will, it'll do what the stocks are doing. So if the stocks are going up, it's going to go up. Now, it will charge you, of course, I'm just going to put MER here, the management expense ratio. So it will charge you fees. So because obviously that management company, they're not working for free. They got to get paid. So they will charge you a little bit of a fee. So if you were doing this yourself, so if you held those basket of stocks yourself, you wouldn't have that management fee. So that's kind of what you're paying for, that convenience of not having to manage a whole bunch of stocks. And they're going to go up. They're going to go up. It's going to be growth. Pure growth. That's what you're getting. You might get some dividends. You might get, I'll put a little I. We'll put a little I. So you're going to get some dividends, typically, unless it's 100% growth ETF. So that's kind of fantastic. That's great. Now, the other case, of course, is, and we're going to talk, we'll put ETF, and I'll put a CC here. All right, so now you got the covered call version. So the covered call version, it's using options. So it is writing options that will basically pay what's called premiums. So those premiums is, it's pure money. It's pure money that's coming back to you. So you are getting, you're getting the dividends. So you'll get the divs and you're going to get the premiums. All right. So you're getting more money. So basically here, what ends up happening is you now have a little G for growth, but you got a big I. So that is your income. So that's how they're working. Now, how does that translate to returns? So here's the thing. And let me see here. All right, come on. There we go. All right, so with our regular ETF, it's mostly growth focused. So you'll get, I'm going to use a straight line. I'm using a straight line just because that's easier to say. So you're getting this straight line of growth after, of course, the fees have come out. Simple as that. Now, with the covered call, all right, well, here's the thing. Typically, and I'll use a different color for the covered call. Let's go with purple. Typically, that covered call is not going to they're not going to grow as much because, well, why? They have the little g. ETF has the big G. So you're going to get that more growth. Now, what you are also getting in addition to this is you're getting, and I'm going to use a smaller one. We'll put it like this. You're getting that income. All right. So that right there, that's that big chunk of income that you're getting from the covered calls. So when you look at this over a long period of time, so for example, let's say if you looked at it over 10 years, well, the person who has that ETF right here, yeah, you know what? They will win. Their total return is going to be greater. It will be. It's because you have that, and I've talked about this many times on the channel. You have that capped, capped potential. It's gone. It's gone. Now, what can you do about that? There's a couple of things. If you are reinvesting these, then, and I'll go with a slightly lighter, let's come over here, that, your line gets a little bit closer. You still don't have, well, actually, I'm going to do a straight line because it probably won't show up very well. You still don't have that same total return that you would have with the typical ETF. Now, there are exceptions, guys. There are exceptions. So, we're going to talk about that in a second. So, because of that, this is what you're getting. So, I think was it Daniel? Was it Daniel who came up with a video this week sort of really attacking covered calls? That's kind of that thing, right? So you're not getting the same total return. You're not. This is part and parcel with covered calls. You're paying, it's a trade-off. You're trading off some of your income, not your income, but some of that total return. You're paying that off so that you can get income now. And that's kind of where it boils into. So, okay, so if this is all about income now, well, okay, that's great, right? But what if you're a long-term investor? So if you are, let's say you're 25. If you're 25, should you be an income investor? You probably shouldn't if your goal is to grow your portfolio as big as you want it. So yeah, in that case there, and Daniel is young. He's at that age where a covered call fund is probably not in his best interest. But where does this start to change? Well, let's talk about retirement. I'll just put RETIRE. Well, with retirement, you've got a couple of options. You have two. Let's go with both scenarios. If you go no CC, all right, so if that's a situation, you're going to have in your TFSA, I'll put a TFSA here. Let's just say, we'll say you're using your TFSA, which is smart. Let's say your retirement is all in your TFSA. We're not going to talk about the RRSP for this example. Well, you can still get your income by, well, you'd have to sell. You'd have to sell stocks to get income out of it. And yeah, the stocks are growing. So you're thinking, okay, well, if my stocks are growing 20% per year, well, I could take out, well, you know what? Let's take out 18% of that. Well, that's fantastic. And a lot of times that's great. But here's the problem in retirement. If you need this money to live on, so you need it, it's mandatory because you're living, it's paying your bills, your expenses. Well, what happens in a bear market? Can I draw a bear? I don't know if I can draw a bear. Let's try. Here's our bear. And he's got kind of a growly little face here. But all right. If you're in a bear market, what happens? You still have to sell But guess what? In the bear market, you have to sell at a loss. There we go. Big loss. Yikes. So that is where that strategy doesn't work. And depending on how bad the bear market is, like take a real bad situation like the financial crisis of 2008, you could be selling at a significant loss. So that's not good. That's not good at all. Now, if we look at the other scenario, so let's just put a line here, and actually we'll just put a line here. If we look at the other scenario with covered calls, well, yeah, you still have your TFSA. And instead, what you're doing is you are pulling it out as dividends. So you're pulling out the dividends, and that becomes your income. All right, that's fantastic. Great. That's how you're getting your income. You're not selling stocks. Your stocks stay exactly as they are. You're not selling them. Okay. Well, what happens in this case if our friend comes along? All right, we're going to try a bigger version for the people who are. Here we go. Let's give them. We'll give them some freaky eyes here. There we go. What if your bear? Well, that looks scary. What if your bear comes along then? Markets are falling down. So the value is falling down, but guess what? You don't have to sell them. You don't have to take that loss. And in reality, covered calls sometimes actually perform better when the market is in a bearish trend or sideways. They really love sideways because of that volatility. That's one of the things that covered calls. So in this case here, this person who is retired, they don't have to worry as much. Whereas, this person up here, it could be a situation where, you might be like, I just don't want to sell at such a loss that maybe you say, all right, you know what? I'm just going to I'll skip supper this week instead of taking money out. And there's no need to do that with the covered call. So this is kind of where they come in. Now, mind you, and this is kind of, I think, when you look at Adriano, and Adriano I know had a response video to Daniel. He's from that area where he is very, very all in on covered calls. All in. He's like 100% income investor, and he's doing well with them. And that's the thing. You can do well with covered calls. Yes, you're trading off a tiny bit of upside potential. And I always say, if you're looking at this is where fundamentals come into play. If you're looking at good covered calls, don't just sort of go and say, okay, who has the highest yields? Those are the ones I'm going to jump on. And some people do that. You don't do that. You jump on the ones that have high yields, but have a pretty good track record. So, and that's kind of that thing. Now, the other option, of course, as well, is you don't have to do both. You don't have to do either. You could always do what I like. And this is what I like. This is my favorite style of investing here. Let's go with green. I want to go green in the middle. You can always do my hybrid style. So, a hybrid where you do have a core of non-covered call that are, creating some stability within your portfolio. And then you got a good dose of the covered call one. That's another option. Up until, and this is the thing. So the hybrid for me, this is great until you hit that retirement level. I think at retirement, you probably are, covered calls. Unless, and there's an exception. There's always an exception. If you are retiring and you've got a lot of money, a lot of pensions, you've had a great job that you don't really need that income, well, yeah, if that's the situation, if you don't need the income, then, a hybrid or even stay in growth at that point, sure, why not? Then you're just going to grow as much as you can for when it's time to, shuck the mortal coil, per se, and leave it to the next generation. So there is all of that. Anyway, wow, what a tangent. What a tangent, right? But that's just one of those things. I think there's always going to be people who look at it like it's either an all or nothing. You're either income. You're either income or growth. And it doesn't have to be. There doesn't need to be that divide because they all have. Within the entire ecosystem of investing, they all have their places. They all have their uses. And that's what I always say is don't get sort of stuck into that narrow view of one or the other. Always look at the big picture. Zoom out, look at the big picture, and look at your needs. So start with your own needs. Like, what is it that you're trying to accomplish? How many years have you got left until retirement? What are your biggest concerns? All of these are going to come into play. What is your risk? Everything comes into play. Because there are some people that are like, if you can't wrap your head around cover calls, maybe you want to take this chance and say, well, I'm hoping that it doesn't happen, that we don't get a bear market. But you know that you're gonna get a bear market. If you're retiring, let's say you're retiring today at 65, and you live to 85, that's 20 years. If you think we're gonna survive 20 years without a bear market, I got some swamp land I want to sell you. I don't own it, but I'm gonna sell it to you anyway. That type of thing. So I always say, look at the big picture. Ask questions. I love that you're asking questions now. So ask questions, look at the big picture, make sure you understand, and make sure you're comfortable with whatever it is you decide to do. Because, these are your finances. You've spent your entire life building this nest egg or building these finances. So, you want to be comfortable with what you're doing. You don't want to, don't let yourself get sort of caught in the middle of should I call it a turf war? But yeah, don't let yourself get caught in the middle. Let yourself learn, let yourself expand what you know. And that's the thing. If you don't understand something, ask the questions, find out, definitely. For sure. All right. Let's get back. I got to use the whiteboard. I'm happy. Thank you, Danielle. Let's see. What happened from negative $84 to negative $1? Wow. I'm not sure what you're asking, Defense. I'm not sure. We'll move on. Cowboy says bought HHIC with dividends. CNQE is the next choice. So yeah, CNQE, of course, that is their CNQ single share stock. So yeah, that one's going to be interesting, I think. All right, here we go. Danielle says I started to invest in Foran, copper and zinc Saskatchewan company. I love everything I see about this company. So FOM, well, let's take a look. Let's take a gander. I'm pretty stoked on copper. And I think I've mentioned that a little bit recently here. All right, so FOM, let's pull it up. I'm going to guess as well we're going to have seen a really recent big spike in this one because that's what I've been seeing in copper companies lately. Yeah, there it is right there. I can see it right there at the beginning. Let's pull back. Here it is, yeah, coming up here. So 325. They're not the biggest, but that's fine. I think there's going to be a lot of movement because right now it is predicted. It has been predicted that we're heading towards a copper shortage. So copper is going to be big. So yeah, FOM, there's one that you could certainly look at. One of my favorites, Mary, M-A-R-I. Let's pull that one up. So this here is Mary Maka, I think that's how you pronounce their name, Copper Corporation, and let's zip out here a bit because now we can't see it on the simple thing. And yeah, they've absolutely exploded. I think we're going to see that in copper companies right across the board. So yeah, I have no complaints about FOM. I have a feeling that copper is going to do well. All right. Rory is in the house with a hello all. I'll go back to big. I got to remember to go back to the big screen if we're not actually using the screen on the side. Jim said, hey, had a red day. Then Q-Day killed it over my lunch break and I'm in the green. Nice. Yeah. You get, what can you say? That you gotta love it. When I love it when more than one stock pulls me up, but I'll take it. I'll take it anytime. Tim says most all my portfolio in the red in the past 2 days. Yeah, and we kind of, we were talking on the weekend show. So if any of you don't know, we do have a show on Sundays, 4 p.m. Eastern. It is called, we call it This Week. We look at some of the news from the previous week, and we chat and talk and all of that fun stuff. And yeah, I was saying that I really thought until we got the rate cuts out of the way, we were probably looking at some volatility first half of this week. Now, I think we're going to see things calm down over the next 2 days. So I'm going to go on a limb and say I'm thinking the next couple of days are going to be green, by the way. Oh, and guys, I don't know if I haven't seen it yet, but if the Nightbot hasn't mentioned it, we do have our regular. So anytime on the Wednesday show, we get 4 supers or 4 gifted subs or a combination of, we add a show to the schedule. So that is something that if you guys are looking to get a Friday show, you know the routine. Bill says, all right, my portfolio is up 11.4% since July 11th. I wasn't expecting that. Well, that's not too shabby. Yeah, since July, that's really good. I like it. Let's see. Rory says, I gave Enbridge a haircut yesterday. Ah, yes, you did mention. I think you mentioned that last week. You're going to take some of those profits and can't remember what you said it was that you were going to buy. Oh my God, I'm really far behind because Jim's commenting on the rug pull coin. Oh boy. All right, guys. I might, if I skip a couple of comments on you guys, don't take offense. It's because we're just that far behind. But I have to pull this up. Rug Pull Corp. That is fabulous. Oh, somebody also mentioned something to me, and I don't know where. I saw it in my email, but I haven't seen it on YouTube itself. But somebody did mention to me that it might be nice that if people have a direct question, like if you have a direct question for me, if you put a Q in front of it, then it might help it stick out a little bit. And I'm okay with that. If you guys want to put like a couple of Qs or something like that, if you got a question, I still have to, of course, get to the question, but at least that way there, when I'm sort of jumping over stuff, I won't jump over ones that have like a QQQ. You know what? QQQ, because that's the NASDAQ. Let's use the QQQ. So yeah, going forward, if you got a direct question you want answered, put in that QQQ. Obviously, don't do it if you're talking to Cowboy or Rory or anybody who's not me. All right. Let's see here. I'm just going to jump ahead of a couple of things. I cannot jump ahead of Mary. Guys, Mary is the official captain of the like button. So if you haven't hit that button yet, now's the time. I'm going to have some coffee while you're hitting it. I probably shouldn't because I'm so far behind, but oh well. I'm not in a hurry to run out the door or anything. All right, Jim said, yes, I hit the like. So close to being green today. It said tomorrow on the press release. Wonderful. Your income portfolio was awesome. Oh, thank you. Thank you. Let's see. There was one mistake that Paul found. So in the income part, so the EQCL, it actually is 12.5%. I added it as a comment, but I don't know how that got. Somehow the script got messed up on that. And I didn't catch it when I was filming it or editing it, but Paul caught it. Good for you, Paul. I always love that. The channel members always let me know. Sometimes they find a mistake that I can fix before it goes live. This would have required me to refilm and a bunch of edit. There was no way to fix it. It just, that's fine. I'm human. Tim says, I just literally just recreated, invested my TFSA based on the 100K windfall growth income video. Then the market went red. That happens. And here's the thing, guys. When the market goes red, if you've just done a bunch of moves and then the market goes red on you, don't get discouraged from it. The market will come back to being green, and those things are, those things are going to recover. The stocks, ETFs, whatever you have, they will recover. Just don't get panicky, because that's how you lose money. And it's one of those things, like, it's so easy. So many people get investing completely the opposite direction. Instead of buying low, selling high, they buy high and they sell low because they're panicking. If you have bought stocks that have, or ETFs that have good fundamentals, you should never have to sell. You should never have to take a loss. You really shouldn't. There are exceptions, and we'll talk about those as we move along, of course. But for the most part, don't give in to your emotions. And I have a feeling Tim didn't all of a sudden go and sell everything and go, no. I have a feeling Tim had a much calmer head. All right, let's see. That windfall portfolio, once the distribution start hitting, will turn on. Yeah, and we got more. We got more of them coming, by the way. So next week, we are doing, oh boy, frog. We're doing a frog. That's it. Ribbit. No, that one will be riveting. So yeah, next week we're gonna do the dividend growth one. So, for those of you who've been like, a lot of income lately, where's my total return stuff? That's coming next week. I've had some requests. So, we got some Americans who follow the channel, and I've had a few of them say, could you please just do one of these windfalls with US ETFs? So I might do one of those. I don't know when, but it is on my radar. So I am thinking down the line, I'll probably do a US one, just because, those will be a great one. Those will be great ones to throw in your RRSP. But yeah, we'll look at that. We'll look at that for sure. All right, and I'm gonna skip over a few things here. Let's see. Yes, I'm looking forward to the monthlies to kick in. Nice. WW3 Powell is talking. Oh God, meet Kevin. Meet Kevin. No. The bell. We got it. Oh, the Nightbot is working. Okay, it was just that I was so far behind. Going off on that tangent too. You know what? That tangent did it. But here's the thing. If Danielle asked that question, then I know she's not the only one who's got those type of questions. So I don't mind. I really don't mind at all. All right. I love this. Yeah, don't forget the expiring code ending tonight for all of our member coursed, blah, blah, blah. Yeah, he sure does. I will tell you guys one thing. I'm looking at doing, I think they're going to be workshops. So I'm looking at doing some paid workshops, but I have no intention of doing anything silly like, oh, you got to get in today. The price is going up by the end of the week. No, the price will not be going up. If anything, I don't know. It just sort of feels kind of, it's putting that, you got to do it now or else. It's creating that sense of urgency. I won't do that to you guys. I will absolutely not do that to you guys at all. Mind you, I still have to get it done. So, Rory says flat market today, up 7 points. All right. Let's see. Usually my final numbers are at 16.15 from the market lag. Not lag. It's just I'm far behind. It's yeah. Jim says there are lots of misinformation on investing from YouTube channels, so take it with a grain of salt and do your own research. Yeah, always do your own research. It doesn't matter who. If I come on here tomorrow and you know what? Yeah, I've got a lot of trust in my community. And I come out and say, this is the greatest new stock that I've ever run into. Well, if you just go out and buy it and don't even look at the fundamentals, don't even do a lick of research, that'd be silly. That would be silly. I mean, I'm not gonna throw something at you guys that I don't think is good. That's like with sponsorships. If you guys know, I've done very few. I did one with Evolve, but these were things that I actually believed in. If I don't believe in a product, and I had some interesting mining people at one point that wanted me to to sell a few things. And I've had lots of crypto people who have been, pitching coins I've never even heard of. And, I'm not going to do this. I'm not going to come on here and say to you guys, oh my God, this new Coinomatic coin is the best thing since sliced cheese. No, it's not. I'm not going to do it to you. Tim says, same with Blossom, have to do your own research in the end. Yeah, you always have to. You always need to. Because, I look at it this way. How much work did you put in to make the money that you got? Well, how much work should you put in to protect it? You have to sort of look at it this way. It's easy, and this is kind of the funny thing. Back in the olden days, when we all had cash, people were a little bit, more stingy with that cash because you could actually see it. It was tangible. Well, nowadays, everything is digital, and it's just numbers. So sometimes it's so easy to spend today because we don't have that tangible representation of our finances, of our value, of what we can spend. So it's easy to spend what we shouldn't spend. And, then later we're like, uh-oh, where's my money? Well, you just spent, you just went on Amazon and you got tempted by 6 things you didn't need. Of course, there's your money. It's in Amazon's pocket. Rory says, okay, then try to suck you into a free 3-day trading videos only to push a product right at the end, not mentioning any names. Oh boy, yeah. It happens. Larry is in the house. Hey, Larry. The juice is loose. STNG up from 39 to 61. Yeah, oh man. Yeah. And you've been talking about that one for a while. And anybody who doubted doubted what it's going to do, just take a look at it. Just take a look. That's all I say. All right. Jim says, buying a non-covered call leveraged ETF that's on an index like the TSX 60, you get diversification in stocks. That should probably perform, and you should match or even beat the market for a nominal fee. Yes, and when it's going up, when it's going down, if you have a leveraged ETF, well, yeah, you're going to go down harder. Now, mind you, and also keep in mind, and I want to be sort of clear, because if you look at, for example, some of the big leveraged ETFs, so like, for example, the Beta Pro ones, well, they apply their leverage basically on a daily basis. So those ones, it's not like you can ride it up and down with the leverage and say, oh, it's fine. It's canceling each other out both directions. Because of the way they manage the leverage and the way they cancel it each day, you can get some really funky results. And some of them not in your favor. That's for sure. So you got to be careful with some. But if it applies a constant level of leverage, yeah, it's going to move up and down. Obviously. Will it cancel each other out? It should. It technically should. I wouldn't bet my life on it, but it technically should. All right, Paul says when a cover call ETF beats a regular ETF, blocks cover call ETF plus 3263 beats IBIT. Okay, yeah, so there's a couple of examples. And there are some cover calls that are absolutely demolishing the competition, and and I have a feeling as well. So a few months ago, and I talked about this the other day, BMO released that gold ETF. It's a cover call ETF, a gold bullion, and they're using what they're calling spread or cover call spreads on it, which is basically you write a covered call, you also buy options on it as well. So if it does exceed the strike price, that's where you normally lose that upside potential. That's when the other option comes in and makes some more premiums to sort of really help try to shore that up. Now, it's unproven. So, hypothetically, it looks good. But they've only had a couple of months. Once they've had a good year or so, and if that actually really works, I could see it catching on. I could definitely see it catching on. All right. Testing says HDIV versus VDY. Oh, for a video. I'm assuming this is a request for a video. I like it. Although, I'll keep in mind, it's going to be HDIV, of course, covered calls, leverage versus VDY. No covered calls. It could be it could definitely be an interesting one. I'll put it in the back of my mind because I'd like to do some more of these for sure. Cece, have you seen the record of American margin use? 2008 apparently failed to educate that margin calls can collect their house as a payment. Yeah, it can. I haven't seen the record, but you are right. You are right. Some people never learn. Lisa says, hi, everyone. Paul says, all right, so Ben. Oh, it was Ben. All right, Ben Felix. Why I was thinking of Daniel Prong for some reason. No, it was Ben Felix. I am corrected, absolutely. Paul says, Ben Felix never says the growth investor has to sell some shares once per year into cash for income. Limits the growth upside. Well, he hasn't say it, but that's what you would have to do if you're living off of it. And I just wanted to be clear. That's kind of the two scenarios that you would certainly have. Doorpat says, third strategy, growth investor here. Bought lots of PLTE and so Palantir and HHIS in April, up 50%. Use monthly income to buy more growth ETFs in Max TFSA. Buy more covered calls only when major dips happen without the income. Okay. And that's another, and you see, this is the thing. There's many ways you can approach investing, and Doorpat has this other strategy. It's not a bad strategy. Using the shape of the market, like buying the covered calls when the market's down, when the market's up, just DCAing into growth. So that's a version of a hybrid portfolio for sure. Is it effective? I like the hybrid ones. I would, so I would probably say yes, it could definitely be effective. Jim says, the thing is, you can go income now and use the income to build up growth. Well, sure you can. I mean, if you're reinvesting that income, you do get yourself a lot closer. And, and some people, I mean, depending, there are people who will ride the growth wave up, and as it kind of peaks and hits its crescendo, they'll take a bunch of profits and put those into basically moving into some of the covered calls and things like that when the market's heading down, because then they're technically making a little bit more money during that period. So there's a lot of different ways that you can certainly approach it. Tim says, I bought into Palantir at the top. Now I'm sitting in a big loss. Can't wait to dump it now, though income is good. Okay, fair enough. I still think there's probably some room. I think you will get an opportunity to get out of Palantir with a win at some point. Defense says, loved your explanation of cover call usage. Thanks. No need to sell, and you keep getting money each month, growing in number, and each month you invest. Yeah, absolutely. There's lots of different things that you can certainly do. And that's what I'm kind of liking. So even though I called this portfolio Windfall, the series, I see a lot of potential that we could explore all kinds of different hybrid strategies. And, it could be really, really interesting. Anyway, let's get back to here because once again, I'm still trying to get caught up for you guys. All right, let's see here. Growth investor in retirement might have to work part-time in retirement. Yeah, absolutely. That's a possibility as well. Nowadays, depending on what you have, like a lot of people, like my mom, she's like 75, maybe 75, 76 this year, maybe. I'm thinking. But she's still working. She used to drive school buses for the longest time. But now she just sort of helps on the school bus. So for the special needs folks, she puts them into their seats, sets up the seatbelts, all of that stuff. But, it's still a job. She still needs that to make ends meet. Although, she recently sold her house, so she's got a little bit more money on the side if she needs it for sure. Danielle, you are making me feel much better about owning covered call, as I am almost 53 and almost retired. It makes so much sense the way you explain it. Well, that's the thing. Like I said, always dial back to the big picture. Just dial back to the big picture. And if you got specific questions, I'm pretty approachable. Just make sure, like on Discord, I don't know if you're over on Discord or not. If you got a question that you want me to answer directly, opposed to the community, Just use my @ sign or whatever. Call me out. That way, I'll get an email notification of it, and I'll know to go check it out. Okay, let's see here. Paul, it was when I first, okay, I'm skipping those ones. Let's see. Tim says, I'm just retiring now, doing hybrid growth income portfolios. Nice. And Jim says, my portfolio is 50% Q-Day, and it acts like a yo-yo. Yes, that's one of the dangers. Like, when you overinvest in one asset, you have to have diamond hands if you're going to play that kind of a portfolio, because whatever volatility that one stock has, it's transferring that volatility to your portfolio. So in Jim's case, if 50% is Q-Day, if tech has a bad day, so does Jim's portfolio. So you kind of have to be, prepared for that. And, tech is not going to be like, we're never going to run into a situation where tech is just going to all go away. It won't happen. But, tech can certainly have big crashes. It can have deep crashes. I mean, look at the last bear market. Tech led the way into that bear market. Will they lead it into the next one? Hard to say. But, just be prepared when you are over diversified, and, there's probably a few funds out there that if you're over diversified and it wouldn't impact you as much as something like Q-Day. So where Q-Day is tech, big time. If you were over diversified in, let's say, XEQT or EQCL, the sort of the leverage, the covered call version, that is not going to be impacted as much because it's much broader market, so it's just something to keep in mind. Let's see here. We're going to skip over those. Let's see. There was someone who receives 10K a month in dividends and has 400K in covered calls. Okay, yeah. If you've got 400K in covered calls and you're only receiving about 10K in income, I'd be curious to know what covered calls are out there, because there's probably a better way to handle that. I would say if you've got $400,000 in covered calls, you could be more than doubling that 10K. I would say on a conservatively, you could probably get 30K. But, on a more, if you got aggressive, you could certainly get much higher. But I like the conservative approach, personally. Dorpep, they are both speakers at the Toronto conference this Sunday. I hope they speak or fight if needed. I think they'll be civil. I think they'll be civil for sure. You got to realize too that and this is going back to the beginning, one other thing that drives viewership on a channel is a little spat between two channels, because then if you think about it, Adriana's viewers want to all head over and watch Ben's video, and Ben's viewers want to head over and watch Adriano's channel. So you'll get that stuff back and forth. Now, I did not, and I will, and I want to be very transparent here. I did not see Ben's video. Well, heck, I thought it was Daniel Pronk. I thought it was Daniel. So that shows you why I haven't seen that second one. I did see the response, though. I did see Adriano's, but I did not get the chance. I had planned to, but we can blame Rogers. Rogers has been doing some upgrades in our area the last couple of days, so I didn't really want to get into too much commitment with intermittent internet through the day the last couple of days. But as far as I know, it's now done. So I'll have to check that out sooner than later, just to get that side of the story for sure. All right. Tim says, I bought Palantir because at the time there was a lot of noise about Palantir was doing so well. I didn't know how to do an analysis on funds at that time. Oops. Fair enough. You know what? It is a learning process. Now, lucky for you, I think Palantir, I think there's still a lot of potential there. I think they will get back into the green. I think there's room for even more than that. I think there is more room for some growth. I mean, the need or the desire for defense, I don't think that's going to go down at all. Trump hasn't been talking as much about it in the last little while, but it's still there. And the need to get NATO up, and heck, even some of the stuff, if you think about it, with Poland shooting down, for example, some of those Russian drones, the demand is there. All right, Zamair says, why didn't I bet on my prediction that the rate cut will pull the market a little bit up and then down? It's easy to make a prediction. It's sometimes harder to actually act on it. And sometimes you'll act on it and you'll be like, why did I act on it? Danielle says, I'm very hybrid. I have 12% of my total savings in covered calls. Okay, that's pretty conservative. Yeah, so that's not too bad. That's not too bad. And definitely, you know, as I said, as we're going to explore more and more different types of portfolios, hopefully we find, or I at least hopefully present one that you really like. You know, there is that. There's that for sure. Tim have Palantir 2 plus 6.5%, just lost potential profits. And Mary saying, what's happening with Constellation Software? Down big time. Yeah, I have seen, I've been, actually, guys, let's pull this up. Let's pull up Constellation Software here. CSU. There we go. So yeah, this is one of our big tech companies. Obviously, we got Shopify, but this is the one that has the really expensive shares. But yeah, you can sort of see, from the highs back here when they were up pushing. Heck, look at here. At this point, they actually broke the 5,000 mark. I remember Vic was all excited about that. But yeah, they have really, really retraced. But a couple of things. One, this is not abnormal for them. This is kind of their normal mode of operations. This does happen a lot. But at the same time, I worry sometimes, and I don't want to say this is a real concern, but one concern I do have is AI. When it comes to some of these companies who rely on software, because a lot of companies are learning that AI can do what perhaps maybe they were using Constellation Software for. So yeah, there could be that impact, but I think they have the depth, they have the moat that if that's happening, they'll adapt, and I think they'll still be fine. If I was looking to get in on tech or on Constellation Software, would I buy now? Yeah, I would. I do think they're still going to recover from here. Will they get back to 5,000? Maybe not right away. Maybe not even this year. But I still like the company overall. All right, and I am going to, let's see. There we go. What I meant is when I checked my balance, it was minus 84 at 14, and now at 15, it's back up to, how come it went from minus 84 to, Rory answers you right here. Exactly. That was it, the meeting. So anytime there is, anytime the Fed is basically meeting in regards to, well, rate cuts, you will see a huge slide. And we saw it. So look here. Give me a second. Let me pull this up. Let's go. Right now we're on silver. Let's go not to the TSX. Go here to the S&P 500. And I don't know if you are watching this on a computer, but this here is a very big red candle. So basically nothing happened in that hour, but that's if you look at the beginning of the hour and the end of the hour, because there was not a lot of movement. But it did go up, and then it went all the way down and back up. So yeah, the S&P 500 had a huge, and when we look at Canada, same thing. Now Canada did come down a little bit. We still had a green day, but we finished only about 0.2 above. So in the green. But yeah, everybody at that time saw a big spike in volatility, and that's what you were seeing. So nothing to really be concerned of. Very, very normal. Cowboy says Biggie looks pretty good. 31-cent dividend monthly, but the C day and Q day are twice a month. Right. Oh, Biggie is not. Somebody was telling me that it was going to be twice a month. I was like, well, I need to see that. But yeah, if it's only once a month, I can see. Well, here's the thing. You know what, guys? If you're reinvesting, that twice a month certainly is pretty inviting. Definitely, for sure. All right, Patricia's in the house. Hi, I'm listening in the subway. Done with the work. Okay. Well, I might cut out if you're when you go underground. When you go underground, either that or you're at the subway enjoying a sub. But I have a feeling we're talking about the rail version. Brian says, my Palantir is up 105%. I bought back in at $82. I started buying at $7.70 and kept selling because I thought it was overvalued. I was up to 880 shares at one point, but only 100 shares now. Okay. All right. Let's see. I bought Biggie and Canny pay twice a month. I thought they did. And Brian says they do. All right. Good. Speak of the devil, I mentioned Vic earlier. Here's Vic, stuck in traffic with enough time to hit the like button. Guys, hit that like button. I'm having some coffee. Holy cow, we're an hour in and I do not know how far behind I am. Actually, I do. There's timestamps. I just noticed that. So Vic posted that at 4:22. It's 4:50, so I'm about 30 minutes behind. All right, I'm gonna start to be a little more selective, guys, because otherwise we're all gonna be here till like midnight. Let's see. Foran is that company the Canadian government was talking about last week. They are still in construction and production should start mid-2026. The stock will rise probably Q3, Q4, 2026. Yeah. So they're involved in the 5 that got greenlit. So fast tracked. So yeah, no, I like the company. I still like my Mary, but I like that company too. It is nice. All right, Vic stuck in traffic, but enough time. Wait a minute, that's the same quest. That's the same thing. George says, Candace, you're a rock star. Most balanced and informative video on the subject of growth versus income versus hybrid. Oh well, thank you. I do what I can. Vic says, after Mary, I'm assistant captain of the like button. Ooh, Vic just promoted himself. I agree. You know what, Vic? You can be the assistant captain. We need a couple of assistants. Rory can be the other assistant captain because, between you, Rory, and Mary, you keep the likes in order. That's for sure. All right. Fred Zorro, financials are doing great on the TSX. BNS seems poised to reach 3 digits. Wondering how the insurers will do with the rate cuts. I think they'll be fine. It's a double-edged sword. It's not really. One, yes, banks will make a tiny bit less interest, but at the same time, it might help with some of the defaults. Even a little bit will help. Will save some people. It's not going to save a lot of people, but it will save some people. So, they actually did really well with the last batch of rate cuts. And a lot of people were saying, how are they going to do well? But they did. And once again, that it really helps their situation overall, especially when it comes to their loan loss provisions. I think the banks will be fine. I think they'll be fine. And yeah, I would love to see that. Sorry, I didn't even have this up. I would love to see 3 digits for Scotiabank. All right. Amrit says, saw my ZRE REIT hitting a nice high, but then retraced down at market close. I wonder if this is because people sold and wondering if it went up from the rate cut news. Rate cuts are good for REITs. REITs and utilities, those are the 2 sectors that tend to do well with rate cuts. In fact, let's take a look and see if we got any kind of movement on RMAX. Now, the whole market went down, so it might go down as well, but why not? Let's just take a look and see how RMAX responded. I'm just going to the 1 month here. So yeah, you can sort of see, it's still a little on that slope on the downside, but keep in mind too, any movement to the upside right now with a REIT or a utility from this rate cut is all about the news. It's not about the actual rate cut itself, because that does take time to filter into the economy. So just something to keep in mind. Tim says, I ran analysis on each and every fund prior to buying, so I know the funds I bought are strong in foundation, so now I'm in hold, grow, and take those monthly dividends. Great. See, I love this approach. Tim, you're doing it right. That's the right way to go. Cowboy, Candace in Moneyland down the rabbit hole. I know. Keep your eyes on utilities. It's getting interesting. It could. Let's see. Having my first meeting with a real rich person. She's a VP at Google. Nice. Let's see. Jim says, I know Candace is a stand-up YouTube investor because she tells us to do our own research every video. But yeah, I mean, I will always tell you to do your own research. It's like, it doesn't matter. I mean, how do you know I didn't earlier in the day hit my head hard and then came on the air and started talking about, I don't know, a fidget company saying, fidgets, they're making a comeback, folks. You got to buy this stock. Nah, you know what? You got to walk away from that and say, yeah, okay, let's do my research here. Nope, fidget's not on the way back. Unless perhaps you're neurodivergent and you want a fidget, but nope, not a big market. So anyway, Brian says, I've been getting my daughter to watch your videos lately. As a new investor, I told her you offer fair and honest help for investors. I said, I don't agree with all your picks, but our goals differ. Absolutely. And that's the thing. If you agree with every single pick I give, I would question it. No, I try to, and keep in mind, guys, there's a difference between, like, when I present a video, all right, I'm taking an unbiased approach to whatever the topic is or whatever group of stocks I'm bringing forward. Will they suit everybody? Nope. Are they all stocks I'm going to buy? Nope. Are their fundamentals good? Yes. That's the thread that binds everything. Is that thread of fundamentals. So I will, because I know, I'm more of a hybrid investor personally. I often call it a total return investing. I'm a little more on the income side than on the total return, but I would say the core is definitely total return with a good speckling of income in there, and it will grow. When I retire, I will be 100% income, 100%. No doubt about it. I know this. So, with that in mind, I know that somebody like somebody who's already retired, I'm not going to come to them and say, all right, let's, I don't expect them to agree with, for example, if I do a total return stock list, they may not even watch it because it may not be what their investment style is in. But no worries. The next video is probably going to be an income one, and it's going to be in your alley. But yeah, nobody should ever think that you have to agree with every stock I show. So when you do disagree, fantastic. That shows that you're a good investor. You don't want to be that. And sometimes this will happen with new people to investing. They might come in and say, okay, oh, this is a good channel, great. And then they sit down and they write down every stock I mention. And they're like, oh, I got to have that, I got to have that, I got to have that. No, you don't. You really don't need to have all of those stocks. I'm ranting. I should be big screen when I'm ranting. No, you don't need to have all of those stocks, not even remotely. I'll present new stocks. And maybe they are perfect for you, but if what you already have is meeting your needs, why are you going to sell what you have so that you can get the new fancy covered call ETF if your old covered call ETF is beating the market and doing things like, for example, I would never, if I had a good amount of HDIV, I probably am not going to sell it for C-Day, even though I think C-Day is awesome. So yeah, it just goes that way. So guys, it's okay to disagree. It is absolutely okay to disagree. And it's okay to say, you know what, you got that one wrong. Because, I may do my best to bring you the best that I find. But yeah, there's going to be the odd stinker that makes it through. So feel free to call me out anytime you want. I'm okay with that. All right. Larry says, also I joined the finance board at GoPuff. It's like DoorDash. I'd never heard of GoPuff, but I like the name of it. Normally, for some reason, you said GoPuff, and I was thinking of Stay Puff for a moment, and then I don't know. Cowboy, your information is easy to follow. No hype, no fluff. That's why we keep showing up. Yeah. I will make things entertaining. Because that makes it easier. It makes it easier to learn. It makes it easier to digest information. But I'm not going to create, I'm not going to create a fancy box and put a pile of poop in the middle and try to sell it as something great. Not going to do it. Like when we go into a bear market, those of you who are here on the channel in the last bear market, I would put up lists with like, okay, let's see who hasn't fallen the most today. And that we'll get back to that eventually. All right, let's see here. I bought BTGD ETF, 100% Bitcoin and 100% gold with daily rebalancing. No covered call, just regular. That actually sounds pretty interesting. BTGD. All right. I know I'm behind, but I want to see it. BTGD. Here we go. Let's see. STDK 100% Bitcoin and 100% gold ETF. It is a US one. I imagine it's going to be... No, it does have a distribution on it. Interesting. A small, very small one, annual one. So, yeah, this is something you could have in your TFSA, I guess, if you were looking to get that gold/Bitcoin. Now, here would be the thing I would ask, and I'm not going to dig deep enough in here to find out, but is it equally weighted, Paul? Is it equally weighted? That would be kind of cool. Michael says, why did SLDE drop today with PE of 1.3? Looks cheap. I don't know, but if they dropped later in the day, Michael, it was probably because of the rate announcements. There was a lot of movement in the market thanks to that. All right, Danielle, the cover call I have are the same you talk about on a regular basis. So HYLD, Bank, HHIS, eBank, HHIC, UMAX, NVHE, and SHPE. Thinking of selling NVHE eventually because too risky, will never buy the very big ones. Yeah, I would definitely say, NVIDIA is, and I don't know how much of a runway they have left. They might have a few years, but there's a lot of companies trying to catch up and take some of that chip share from them. So yeah, they might be one that you'll get the exposure within HHIS. And I think that's fantastic. So yeah, I would agree with moving eventually out of NVHE for sure. Everyone uses Palantir. Most grocery stores use them, and now shipping companies. Yeah, so that's what I'm saying. I'm thinking Palantir has more room to grow. So yeah, I wouldn't jump out. I would not get out of them. I think it was Tim? I think it was Tim who was mentioning it. CC, supply demand principles. A copper shortage would drive up the semiconductor industry. Yeah, that's the way it looks. Now, mind you guys, this copper shortage that I'm talking about, it's not expected to really hit till about 2030. So, right now you're thinking of, let's see, which seeds. I mean, obviously, as we get closer to the shortage, that's going to drive prices up on copper anyway. But we want to just sort of see which ones we're going to grab. All right. Nice, my favorite Swedish investor, is in the house. Let's see. EU rules stopping me from investing in funds, ETFs from North America, but split share are allowed. But happily, I did find a MONT div monthly layout, and it's Swedish. Nice. Yes, I would love to see it get a lot easier to invest in other countries. Like I would love if my broker would allow me to pick up some Swedish stocks. I'd be asking you which ones to get, but I would love to dabble. I would love to dabble for sure. NVIDIA, Palantir, Broadcom are struggling since Oracle jumped up in price. Like everyone jumps from stock to stock, they will have their day when the narrative changes. Okay, fair enough. Didn't know HHIS can be bought through RRSP tax-free. All right. Yeah, you can put HHIS into your RRSP. Tax-free? Yes. Keep in mind though, every bit of it, none of it's technically tax-free in there. Just means that you're going to pay taxes on it when you pull the money out as it grows. It'll grow and, that's fantastic, but you will pay taxes on 100% of everything it grows into as you remove it from your RRSP. That's the one downside to the RRSP, but the goal and the idea is that if you wait until retirement and you're pulling stuff out of your RRSP, then you should be hopefully in a lower tax bracket. So you're not paying as much taxes as you would today. Let's see here. Monthly payouts is rare here, so that's one reason I like to invest in Canada. Oh, really? I did not know that. So is it mostly quarterly payouts in Sweden? Interesting. Interesting. I did not know that. Reverend Ramirez has just saw something from that prof who recommended SPMO. This ETF looks great. What do you think over VFV or SPY? SPMO. Let me take a look here. Let's pull it up. Oh, I do have it up. SPMO. Well, that's not SPMO. That's S bracket PMO. SPMO. There we go. All right. So yeah, we're looking at the Invesco S&P 500 momentum. Interesting. All right, and actually, I think this is the real one here. All right, let's pull that up and take a look. Okay, I like the movement on it. I do like the movement. I'm going to pull out to the 3-year. All right, so yeah, it seems to be moving good. Now, I don't have a lot of experience, Reverend Ramirez, with this one, but it looks like it's a straight up growth. I notice, yes, very small yield on it. Are they doing anything else interesting in here? Let's see, 90% of the total assets in the underlying. So what's going on with the other 10%? It doesn't tell me what they're doing with the other 10%, but yeah, I would want to visit and look a little bit deeper. But yeah, it seems to be moving in the right direction for sure. But without actually doing some analysis on it, it would be hard to say whether it is outperforming, like, for example, the VFV. Or in this case, I wouldn't even use the VFV. I would use the VOO because this is a U.S. stock. Let's use a U.S. benchmark of the S&P 500. And just to sort of, and give me a second here, let's duplicate this tab. And let's bring up VOO. Here we go. VOO US right here. And I think we're looking at the 3-year, are we? Yeah, 3-year. And you can see, I mean, they look very similar, like very, very similar. So yeah, interesting. Yeah, so in the case of here, in the last 3 years, the VOO, or sorry, the SPMO went from 52 to 120, and this one went from 330 to 606. So, okay. I can tell you right now, in the last 3 years, on the 3-year time frame, the VOO didn't quite double in price. Whereas the SPMO, yeah, they did double. They did double. They more than doubled. So on the 3-year time frame, SPMO does look to have made more money. So yeah, there might be something to it. Just from that little bit of a look that we just took. All right. Amrit says, waiting to see when AQN hits my target 825. Got in at 768. Okay. Yeah, I have that. I'm waiting. I have a swing trade going on AQN. So I'm waiting too. I think you got in at a little bit better than I did, maybe. I think you did. I'm pretty sure you did. All right, skipping over that. Let's see. Larry says, I did 3-month research, good and bad, on cover calls. Now I'm PII, which is passive income investor. In case you guys ever see the PII and like, what is that? It's passive income investor. And retiring 5 years early, that is what works for us. Please do your research and do what works for you. Exactly. That is absolutely, like, you know, there's more than one right way to invest. And they're all very, very valid. And yeah, you can make an argument for any one. And I look at it this way. As long as you're true to whichever method you're doing and you're doing it right, you're going to be successful. You know, and, you know, sometimes, you know, going, okay, well, if I want to do it this way or that way, sometimes it's just a case of nickel and diming in some cases. Sometimes there is a little bit of a difference, but, you know, it really comes down to what is going to fulfill your own needs, your investing needs. Those are more important than, you know, whether somebody over the side says, oh, you're doing it wrong because you're not doing it like me. Well, maybe they're doing it wrong because they're not doing it like you. You know, it's just, yeah, it's fun. Paul, QQQ in the green in after hours. Not surprising. Like, I am expecting to see some green over the next couple of days. Cowboy, looked it up on dividend history. Stand corrected. Thanks. All right. Not sure. I'm so far behind, I don't know what you're talking about. That's fine, though. You seem popular today. Awesome answers to many questions and very educative too. Thank you. Well, I do my best. I do my best. Let's see. Mary Barra dumps 40% of their stock. Dura dumps 21% of their stock. Dumping stock in your company means you already know it is dying. Yes and no. Yes and no. I mean, sometimes if it's that large amounts, like you will, if your company is doing really, really well, sometimes you will take profits. And there are, for example, depending, and I don't know with every CEO, but some CEOs, guys, they don't get salaries. Some of them don't. Some of them just get stock options instead. And those ones who get the stock options, if they need money, they're gonna sell some stocks if they, if they have no other way to get it. Especially if they need a big amount of money for something, maybe they're buying a new boat. I don't know, whatever floats, right? That's not them having less faith in their company. That's them just taking their pay. That's all that is. So you will see a certain amount. But when you see, in this case here, where somebody dumps 40%, or a crazy amount, well, then you do start to question. And if there's multiple people dumping at the same time, then, oh boy, then you really have a concern. And that is one of those things. So when I do deep dives, like on regular companies, not ETFs per se, I talk about the dilution, but I'm also looking to see if there's any irregularities with the insider buying and selling. If I see something there, I will bring it up. Most cases, the stuff I'm looking at has pretty strong fundamentals, and we don't see those type of issues. But it can be, but just be careful when you sort of make a judgment on that, because it could be them taking their salary. But those are typically smaller, not in the amounts that Paul is mentioning. That's for sure. Let's see. Jack says, good afternoon, and thank you, Jerome Too Late Powell. Okay. On your 50 plus. Own your 50 plus. There we go. Awesome. I wonder about swing trading and how to find rate of return and research a stock. I hear about it, but have no idea how. Okay. So swing trading, basically what you're doing is you're looking for trends in stocks. You're looking for a trend. So a lot of times, and this is where you've probably heard of, hopefully you've heard of technical analysis. So stocks tend to behave in a predictable way, somewhat predictable. Now, I'm going to say somewhat. I can't say predictable. And the reason why is that when you look at a stock price, all that stock is how much people are willing to buy and sell that stock. That's all it is. It's how much people are willing to pay for the stock. That controls the price. So because it's how much people are willing to pay, it directly ties to the overall psychology of investors. So it all boils down to psychology. And humans are rather predictable. Maslow has a hierarchy of needs. So this is getting into a little bit of psychology, but it's basically a tiered list of needs that motivate people. And on the bottom are like your very basic, your safety needs, like, shelter, you could say food, things like that, very basics. And as it works up, it moves towards building your life into a better realm. At the very top, it's that whole oneness. The thing the monks talk about, I'm one with the universe, but that's kind of what people are working for, to feel comfortable in their world. And using that tiers, a lot of times you can look at it and you can sort of understand why people react the way they do. Because when needs are denied, well, it kind of goes against what you're trying to build. And that's where you start to get some of the more negative emotions, whether it be with stocks, if there's bad news or the potential for bad news, people start to get a little worried because, a lot of those needs require money, require finances to do. As a result, people get a little bit, they're like, this sort of almost feels like a threat to what they're trying to accomplish in their life. And that will cause reactions, and those will show up on the charts. Those will show up, like, for example, when something drops. For example, right here. Look at this red candle. Do you think that's because we cut the rate? No, it's not. I mean, actually, Canada cut the rate back here, but this is because just the reaction to what's going on with the U.S. How are people reacting? So as soon as Canadian investors saw things starting to, Americans responding, and that big drop in the U.S., and we'll look at that one right here. As soon as Canada saw this happening in the U.S., Canadian investors kind of followed suit. And a lot of times what happens in the U.S. impacts us anyway, because a lot of our assets have a good Canadian exposure to them. Oh, I should put up the one I'm talking to this, Own Your 50 Plus. I forgot to put it up. I started reading, I read it, but anyway. That's kind of that whole psychology behind it. So the psychology is very predictable. People tend to react predictable. I mean, that's why if you think of a profiler at the FBI, that's how they can figure out who has done something or what type of person committed a crime, because of that predictability. That's very predictable within just human psychology. So with that in mind, it forms predictable patterns. So you can usually see what is going on with a stock, or especially on the shorter terms. And you can use that to sort of get an idea of, well, two important things, supports and resistances. So a support is an area where the price goes down, but it doesn't go any further. It bounces back up. It changes direction. If it does that at one line more, like let's say 3-4 times, that's acting as a support. So that it's, they may eventually break through it, but the odds are that they're going to bounce the next time they hit it. Same thing with the top. If they go up and then it comes back down again and comes back down, that creates a resistance at the top. And you can then use that, and oh boy, I really should have did this on the whiteboard. Where is my whiteboard? Where is, I think this is, nope, that's not it. That's not it. Oh, that's the market close. But we're already here. Oh, here it is. I'll just put this line in here. So yeah, I'm basically talking about, you get a movement of a stock going up and down in this. Now, eventually, let's just keep this channel going forward. Eventually, it will break up or it will break down. That will happen eventually. But while it's in this channel, you might be buying here, selling here, buying here, selling here, buying here. Maybe you forgot, maybe you just missed this one and you didn't sell until over here. But that is swing trading. Because the price is swinging from resistance to from support to resistance, support, resistance, support, resistance, and you are taking advantage of that, and you are playing these movements. Now, with swing trading, these movements, like with day trading, these could be fast. Like this could be, quite literally, that could be 5 minutes. That could be 5 minutes on a small time frame if you're day trading. But with swing trading, this might be, maybe this is a week. Maybe it's a month that this is happening. Or maybe from here to here is a week, and that's another week. So they're longer time frames, and you're basically, you are doing the typical thing. You're buying low, selling high, and it's kind of a strategy that you work at to do it. Now, if you're brand new and you want to try swing trading, first thing I'll say, don't use any real money. Play with some fake money. Just play with fake money initially. Just sort of, chart it a little bit and say, okay, I'm going to buy it here. Let's see what happens. And that way there you can get a feel for it. And then if you do want to get into it, maybe start, just buying like one stock and play with one stock. Just because the thing is that if you until you have it down, there's a high chance you could lose money. And so I don't want you to lose a lot of money if you're going to play with it. But that's basically what it is in a nutshell. That's one of the workshops I want to get done as well. It's just on swing trading, because I know a lot of people do. I will point out too, I haven't made any change. I haven't made any this week. It's been a crazy week, but I do let the channel members know all of the swing trades that I do. So that's another option as well. And plus, we have coming up Thursday night, we actually have a channel member live stream. So because there's fewer channel members than what we have here, Well, actually, we probably have more channel members than what we have here, but because we have less people in the chat, it makes it a lot easier for me to go into a lot of depth if you want. So just something to keep in mind. All right, let's get past here. Oh, here we go. Oh, it's the first QQQ. I love it. I love it. All right. I thought before that you should do courses. Workshops would be even better. I'd be interested in swing trading and how to research a stock or ETF. I don't even know how to find the rate of return. Right. Yeah, absolutely. It's actually really easy. Let me show you how to find a return rate. So if you have a stock, so let's just say, we'll say September, what's today? 17th. So September 17th, 25. That's today. So let's say that stock, I like to use the same thing. So if I'm going to use September 25th, I will use open for both or close. But in my case, I always use open. So if your stock today opened at $10. So you have a stock, it opened at $10 today. Well, if I want to find, and we'll do the 1 year. We'll just do the 1 year. I will look at September 17th, or at least, if that's a Saturday, I would go back a day, so maybe the 16th. But I would look at it for 24. I would go to the open and see what it was. All right, in this case here, let's say it was $9. So there we go. We got two pieces of data. So I need to know the difference between those. So if I take the $10, I subtract the $9, all right, that will give me 1. So that's the difference between these two. Simple as that. So I need to know how much that is of, I don't want to use this number because this is how much it's worth today. I want to know how much it grew from where it started. So that $9 right there. So I would then divide that by 9. So that would be 1/9, whatever that is. And then I would multiply that by 100 to give me the percentage. So in a nutshell, you basically have, so current price minus your start price, I'll put begin price, BP, divided by your begin price, BP, times 100. There we go. And that'll give you the return. Now, that is not your total return. That is your return on investment. So that's your basic ROI on the value. If there are dividends involved, well, in that case, you have to then take your current price, all right, and we'll put this in a bracket, plus all the dividends that they received, because you want to count those dividends. All right, and then that's going to be minus the beginning price, and that'll be divided by the beginning price. And once again, times it by 100 to give you your percentage number. So really, really simple. That's a very basic way to do it. If you forget how to do it, quite literally, if you pull up ChatGPT and say, how do I calculate an ROI? She'll give you the same formula, maybe different words, but same formula. So just something to keep in mind when you're looking at that. So there you go. There's a little tidbit. I'm so far behind, but I cannot not help. I cannot not help. Yeah. So BTGD is equally weighted. Yes, I like that. Oh, interesting. So wait a minute. So for every dollar invested, the ETF seeks to provide $1 of exposure to its Bitcoin strategy and so it's using, I guess it's using leverage then if you're turning it into $2 technically. Interesting. Like I said, I haven't even looked at this one, but that's interesting. Okay. Gursky is here, but late. It's okay. I'm 19 minutes behind. I'm 19 minutes behind on chat, guys. 19 minutes. All right. We're going to move ahead as much as I can. I'm going to skip over some stuff. Guys, please don't take offense if I skipped over. Remember the QQQs. We're at that point now. We got to start using those. We got to start using those because I feel bad if you've got a question and I miss it. All right. Let's see. Okay. I meant HHIS on RRSP. Can you get away with the 15% tax? All right, so HHIS, keep in mind, this is a Canadian company. They are investing in American ETFs. So how that works is that any kind of withholding tax is going to be a deal that goes between the IRS and, in this case, Harvest. Where you put it has nothing to do with it. It does not impact it one way, shape, or form when it comes to that part. So we're talking the withholding tax. That's at 15%. Now, Harvest, they will claim a lot of it as capital gains. So the parts that they're able to call capital gains, well, oh boy, those parts don't get taxed with that 15% because they don't. The IRS does not tax capital gains. So that's fantastic. So some of it cuts through. So when all is said and done, a fund like HHIS, they're not paying very much to the IRS. To be honest, they're not paying that much. And you know, where you put it, like I said, it doesn't matter. If you put it in your RRSP, all you're done is you are now paying 100% tax on all of your dividends, 100% tax on all of your growth when you pull it out of the RRSP. That's how an RRSP works. It's a tax deferent vehicle. If you put it into your TFSA, you're paying nothing. All on your dividends or anything else. If you put it in your a non-cash account, so a non-registered account, well, then we need the tax breakdown. So you'll get, for example, you'll have capital gains in there. Of course, you'll have capital gains. You'll have return of capital in there. Now, you're not going to pay anything. Well, on the return of capital, you're not paying anything now. It does lower your adjusted cost base. So later, if you ever sell it, you'll end up paying a bit more taxes because of that, because it will increase your capital gains on it. With the capital gains, you're paying anything that's listed as capital gains, you'll be paying 50% of that on 50% of those because it would be treated like regular capital gains. All right, hopefully that's cleared the air a little bit. All right, let's see. The USA has so many choices. Learned about a lot of USA cover called ETFs and other investments, the good, the bad, the ugly. Brad from YouTube Income Architect. Ah, very cool. What do you think about QDTE? It's U.S. stock that pays weekly each Friday around 20 cents a share that follows QQQ. Yeah. Yeah, and that's kind of the same idea with some of the 0DTE ETFs. So the Daymax ones, for example. Very general, same idea. Yeah, I mean, I don't mind it, other than the fact that it's in the U.S. So that's a one issue I would have with it, because, you know, if you're going to get a lot of U.S. dividends, then you kind of need to put it in your RRSP. So I there's that, but I have no problem with it. I will say, though, I haven't extensively looked at it, but I do understand what it's doing. So yeah, I think it's fine. Paul, today was another example of not having any cash. Uh-oh. That's always the same. That's always terrible. All right. All right, Paul. I skipped over one of your big ones. Sorry. Niece says, it's the same for the whole EU. All right. Yeah, the CEO needs a yacht, so gotta sell. Yep, it happens. OSC, Ontario Security Commission, is investigating purpose investments for ESG greenwashing. Yeah, I've heard. I know that Enbridge as well. There were some accusations of. Now I think in Enbridge's case, it's Alberta Securities that they're looking at them for greenwashing. Niece says it's rare in the whole EU. Quarterly, half year, and once per year is the norm for dividend payouts. Oh boy, yike. Yeah, I don't like those annual ones. It's like I can't wait another year. Top of the scale is facelifts and education. Probably. Let's see. Open Door. Yeah, Open Door. Sorry, it wasn't Open Text. Open Text, I think you were meaning. Because I know Open Text did pretty good today. Let me take a look and see. I thought you were talking about Open Text. I could be wrong. I could be wrong in here. Where is Open Text? No, that's Lightspeed. I know I saw Open Text in here being up a little bit today. Yeah, I'm not seeing them in there. You know what? Let's just go over here. OText. OTXT. Or no. All right. TXT. Ah, boy. I'm just going to type in open text. For whatever reason, whenever I try to find open text, I always mess. Oh, text. There we go. I always mess that up. So no, you're not talking about open text. They were only up a little bit today. Interesting. Well, they were up a big time. I think I might have been thinking of a couple of days ago. Open Door. I don't know who is open. Is Open Door one of the food delivery ones? Maybe. See, dark pools of stock buys and sells to not affect the price. See, my friend was a big swing trader until Northern Telecom lost enough to finish him too. Oh boy, yeah. Yeah, sometimes you gotta, there is risk. There is absolutely risk. Ooh, Paul is in with the $1 super. Of course, that does make Paul a goat. And it puts us 3 super / channel membership gifting away from a Friday show. I do not know how much time we have left, guys. I'm just right now. I'm almost caught up. So maybe I don't know how much time we have left. Let's see. Current price minus average cost. Yeah. Now do the Cager calculation. Maybe. I'm tempted, but no. Putting a stop loss on Atco. Make sure I take profit. Yeah. Yes. I mean, stop losses are really good to use for sure. All right, Cowboy, look at this. For your U.S. income video, could you replace HBTE with blocks? I do not know blocks. I like the name. BLOX. Let's take a gander here. Oh, I do have it up here. Nicholas Crypto Income Fund, Income ETF. Interesting. Half decent yield, 6.956. It's not as high, but let's take a look here and see. Oh, look at this. They're pretty new. Maybe. I'm not sure yet. But it is always a possibility. All right. Where am I at now? Let me take a look here. Right here. It's another Paul Super. That is number 2. And Paul is continuing to prove to us why he's a goat. Why he is a goat for sure. All right. And, look at this, guys. Number 3. Number 3. Paul just wants to see all of the goat videos. All right. Here, you can have the rainbow one this time, Paul. There we go. So, yeah, we're 1 super or whatever. We're 1 away from a Friday show. Rory says Atco's working capital is a negative 10,900 last quarter. Looking at the forensics on why it's dropping. Yeah, that would be always one of those things to look at, because sometimes a negative, sometimes negative capital there might be a reason for it that's not a bad reason. So I always say when you see something like that, it's not a no, but it is a I need to know. It's not a no, it's an I need to know. There we go. Oh, that's kind of cool. That almost needs to be on a t-shirt. All right. When dealing with losses, I use the don't look at it method. You know what? That's not a bad method. It's like, you are going to take losses. Don't dwell on them. If there's a lesson to be learned, and this is how I will look at it. I look at it as like, okay, did I lose because I did not do my homework? If the answer is yes, well, okay, do my homework. If it's no, then I'm like, okay, was there anything I could have done differently? And if that answer is no, then, I'm just going to take the loss. I'll be fine. If the answer is a yes on any of the earlier questions, well, then I have a learning opportunity so that next time I hopefully will find myself making a brand new spanking mistake. Just not the same one. Hopefully. Palantabon says, will Litecoin become an ETF this year? Good question. I haven't heard any buzz. Not to say that there isn't any, I just haven't heard any. So I don't have an answer for you on that, but I imagine I don't even know if it'll have, I was going to say XRP US, because right now XRP is only available, I believe, in futures in the United States. I think probably, I would say early 2026 that'll they'll get a spot XRP there. What's up next for us? What I would like to start seeing is I'd like to start seeing some mixed ones. You know, like you get a Bitcoin, Ethereum, XRP, Solana, you know, in a nice, you know, a real ETF, like a basket of crypto. So that's what I'm looking to see coming out next in Canada. I don't know if there's any on the books yet, but I would like to see them. Yeah, Atco does own CU, absolutely. And, oh, I know I missed something here. Oh, I did. I missed it. Paul came in with number 4. Paul single-handedly got you guys a Friday show. That's fantastic. And of course, Paul does get the final goat. There we go. Paul got my final goat. That sounds kind of weird, but that's fine. All right, awesome. So we will be back here on Friday, guys. Just so you know, Friday we're here. All right, let's see here. Let's see. Don't wait for something to recover if something else is a faster horse. Absolutely. And this is one of these things. So sometimes people will get stuck. Investors will get stuck in it. I'm not going to take a loss. I'll wait it out. It's going to be in the green someday. Well, if there's a stock or an ETF that is going to return your capital a lot faster than someday, it's not a bad thing. And depending on where you're holding it, if you're holding it outside of your TFSA, that's called loan. I was going to say loan loss provisioning. No, it's called tax loss harvesting. And it's not a bad thing. You can, you know, the big thing is, you know, just be sure, do the fundamentals on where you're going to move it to, and if it makes sense, and do the fundamentals on the stock that you have. And if it looks like they've got some serious problems and they're not going to be recovering anytime soon, there's nothing wrong with making a sideways move. Nothing wrong at all. Rory, I'm 20% ROI on Atco at the moment, but it looks like it's changing. All right. Let's see. On Friday, we can see how the FOMC changes things. Well, it'll be interesting. We'll see. We'll see. Friday will be good. I'm looking forward to it. I love Friday shows. Larry says, I now have 30K shares betting against Tesla in TSDD, 2x Bear ETF. England shall prevail. Interesting. All right. Operating cash flow shouldn't be minus 2,500. Ah, yes. All right, there is a new term beyond FOMO. POMO, pain of missing out. Oh boy, yeah. That makes me think of pom-poms for some reason, but yeah, POMO, the pain of missing out. Good one. That's a good one for sure. All right, let's see here. Guys, we're heading up to the end here. Get in your last minute questions. Get them in quickly. And remember, if it's a question, because nowadays I do skip. I do skip now because you guys are just making this too popular. Put a QQQ in front of a question if you want me to address it. Otherwise, there is a chance it could get skipped. I'm not saying it will. Like if it's slow, it probably won't. But there'll be a tiny bit of slippage. And no offense to anybody if they get skipped. I believe Open Door is an IPO US stock. Okay, fair enough. I had not heard of them. That's why I was thinking, I remembered seeing Open Text at one point being up a bit. And that's why I went there. All right. Jack says, also don't sleep on the Litecoin treasury companies. Okay, interesting. There are tons of cryptos that are 85% away from their previous all-time highs that during this bull market will never get there. Let's see. Palabon. Yeah, Litecoin is... I'm waiting for the alts to pop and hopefully the premiums kick in. Interesting. Is this... Lemons are the slice of life. Is the Canadian dollar the next Bolivar? That's a good question. I don't know. I don't have an answer for that. I do not have an answer, but hopefully we can start to change things around. But I'm always... I like to be positive. I like to be positive with what's going on in the economy, but you know, I still think there are rough waters ahead. No doubt about it. Will it make us Bolivar? I'm probably even pronouncing Bolivar wrong. But we'll see. All right. Ooh, here's one of my QQQs. I love it. I love this even more now. TMX has blocks distribution rate wrong. It is around 34% weekly, price up over 30% since June. And that makes sense. Sometimes TMX is not the best when it comes with some of the US stocks because, the TMX site, they are, they're made by the company that runs the TSX. So they're very related to the TSX opposed to US. So Defense says, is it better to have 100% of one ETF, or 50% of two ETFs, or 1% of 100 ETFs? What's the best repatriation? I will say right now, the answer to this is going to be highly dependent on one thing: which ETFs we're talking about. So, for example, if you're talking about XEQT, or if you're looking at the income version, EQCL, if you were looking at an all equity that has diversification out the yin yang, then you could justify 100% of it. I still don't like it, but you could justify it. Or if you had 50% of two, so let's say, for example, if you had XEQT and VEQT, the Vanguard version. Well, once again, you got some diversification. You got some more diversification in there because one, it's different companies. So if, let's say, for example, iShares went under, and this is not going to happen. I really can't see it happening. But, stranger things have happened. Stranger things have happened. In a case like that, and even then there's insurance, so you're probably still fine. But it's just one of these things where I do like diversification. But there are people. There's a lot of people on the YouTubes that are 100% into like XEQT. And they're like, and I've seen it, XEQT, the only ETF you ever need. Now, 1% of 100 ETFs, that one I will say is unrealistic. It's way too much work. Way too much work. I would say, unless you have a lot of time on your hands, I would say even 20 is probably too many. Keep it simple. Keep it simple. That's the way I would put it. Diversification. I love it. MSTE has been slowly dipping down. Is this normal volatility? Well, yeah. I mean, strategy volatility is very normal for strategy. It's one of the reasons why it's one of the reasons that they pay as much as they do. Because you got to realize, when you look at these covered call funds with the really high dividends, well, what's supporting that dividend is that volatility. Now, if we didn't have that volatility with strategy, you wouldn't have as high of a dividend. And you'll notice, and this is one of these things, and something to keep in mind, if you are investing in a covered call, especially a single company stock, and that stock is volatile now, but it does become a lot less volatile in the future, the dividend yield will come down. They will cut their dividend because the volatility drives. Basically, with a lot of volatility, you can charge more for the premium when you're selling the contracts within the covered calls. When you're selling covered calls, you can charge more, and that means more money back to the investor. Zenio, one, if you want simplicity, yeah, one's a lonely number for sure. All right, let's see. All right, I'm not gonna read that because I'm not 100% sure what that means. Paul says, Armit. All right, you're talking to Armit. All right, those are the ones I'm passing over. Yeah, okay. Well, we're gonna jump over the RICO law stuff because I'm not familiar with the people that are being named in it. Let's see. XEQT 19% 1 year is not high enough for myself. Fair enough. And that's the thing. XEQT, it is that's your growth. It's going to be for you're buying growth with that. It is not by any means an income stock. To me, that's a pure growth for sure. All right. Brian says I'm up to 60 holdings. Holy banana bread. A majority of ETFs and dividend stocks, many small positions, only a few I want to sell. I'd rather keep them than sell to simplify my portfolio. My eggs are in several baskets, and that's fine. I would never go that high personally. I don't want to look after that many. YouTube keeps me busy enough. But yeah, if you have the time, then yeah. And also keep in mind too, if you go with very good fundamentals on your stocks and your ETFs, you don't need as much babysitting. You don't need to babysit them as much, and that does allow you to have more if you really want to go that way. All right, let's see here. If BC loses its Columbia Hydro assets, what is the upside to Alberta natural gas companies? It's a good question. I don't have an answer, but it is a good question. Yeah, I don't know. Let's see. My MS poofed. Oh, your message poofed? I didn't. Was it when I skipped? I hope not. It happens. Let's see. Paul says 39.7% CAGR and 98.3% total return since August 31st, 2023 is my type. Yes. And Paul's been, I've been watching Paul's journey. Paul is absolutely doing really well. Cowboy, is QQ? Yes. So QQQ, we're going to start using that going forward. That is just when we get busy, especially when we get busy, it indicates that you have a direct question that you need my answer to. That way there, like a lot of the talking between each other and things that are not important, or if you're just making a comment that, doesn't really need me to answer, that way there, I won't skip the QQQ ones. So the QQQ ones they're like a super chat. They're like a super chat, but, well, one, they're free. And I will get to them. Whereas if a super chat comes in, I'll get to that. Those ones are 100% guaranteed that I get to for sure. They're very important for sure. And guys, keep in mind, if you are a channel member once a month, you do get that free channel member chat thing that you can use, and that has the same power as a super chat. It doesn't help get a Friday show, but it does get an answer it does get a question answered 100%. Unless I don't know. If you ask me a question I don't know, you'll get a I don't know 100%. Let's see. You saw my message, but it didn't show here. Oh, it might have been me. Maybe I didn't click on it. Sometimes I click on it and it highlights it here, but it doesn't pop up and I don't notice because it's behind the camera. That might. Is QQQ like, why not? No. It just stands for question. It stands for question. It sticks it out. We went with the QQQ because it also reminds us of the NASDAQ, but maybe that'll get confusing. So far, not. So far, it's been pretty good. Let's see. And lots of volatility, a 20% range at time. Yeah. So once again, volatility, you're going to have higher covered calls if you're looking at income shares for sure. All right, guys. Holy banana. Oh, my God. We went 2 hours. Guys, 2 hours. This is a long one. All right. So coming up this week, we have a video dropping here on Friday. You'll be able to see it if you're a channel member tomorrow. Now, I was going to do something with all those ETFs I asked you guys for, but with Rogers and their intermittent service because of some repairs they're doing in our neighborhood, there was no way I was going to be able to get that scripted in time. Just no way. Not without. I need the internet big time for that one. So instead, I have done a deep dive. We're going to look at a covered call gold ETF. Compare it to the non-covered call version because I like to compare. Anyway, that'll be coming out on a Friday. And those of you who have been watching the chat for a while, you know exactly which ETF it is because I said it the other day. Ooh, that one needs a deep dive. It's getting a deep dive. So we'll be back here for that. And of course, we'll also on Friday, thanks to Paul, big shout out, Paul. We will of course have a Friday show, and we'll we'll do this all over again. We'll be your gateway into the weekend. All right. Oh, I gotta be big screen. I can't leave if I'm not big screen. All right, perfect. Paul is heading to lunch. Rory says, "Have a great week." That's the best way to end it, guys. I'll see you guys again on Friday. I can't wait. Until then, enjoy the rest of your day, and I'll talk to you guys later.